Hey folks, what's going on? What's up? So today I'm going to discuss NVIDIA Corporation, whether it is in overvalued position or undervalued position, so that you can understand which price to target for buying or selling, so that you can really make millions in the Wall Street. Okay, because NVIDIA is an important stock and many of you are involved in this stock. That's why I'm making this video. Okay, so let's go ahead and discuss. So today the price is $157.75 as of June 27, 2025. Let's see what valuation says. So let's go to alpha spread, and here if you search by NVIDIA, it comes like the NVIDIA should have intrinsic value of $108.82 in the base case. So the base, we have to hold the base case, so it is overvalued by 31%. But our best case, only in the best case it surpasses the value. In worst case it is only $88, but the base case is the case that we should consider in buying or selling. So it is actually overvalued by 31%. So why is that? Let's go deeper into analysis. So let us go for some of the valuation metrics, like let's go into some comparison relative valuation. You have to click here, and now there are some matrices which will, so here if you see NVIDIA relative value, that was the base case of the overall. Now if you consider relative value, that is considered with comparing with the industry standard. Okay, so in this case the relative value is $135.85. Still it is overvalued and by 14%. So let us go and discuss some of the multiple valuation multiples. These are called valuation multiples, so you have a clear picture of NVIDIA. So price to sales ratio is 25.9. so here the value is 42 of versus history. So according to history of NVIDIA, it is expensive than 58% times of its own history if you consider price to sales ratio. What about industry? It is 5. The value is 5. That means it is more expensive than 95% of the stocks of the industry if you consider price to sales ratio. So what about P ratio? So in P ratio it is in good shape because the P is good. So the P is good means versus its history of its NVIDIA's own history is like it is sweeter than the history of NVIDIA itself according to price to earnings ratio, which is called P ratio. But if you consider industry standard, then it is overvalued than most of the companies, like 77% of the companies, because the value is 23. That means 77% of the companies in the industry are less expensive than NVIDIA. What about price to operating cash flow ratio? So if you compare NVIDIA with NVIDIA's history, so it is better it is in better condition than of its own history. Like it is 21% of the time it was more expensive, and 21% of time it was less expensive. Sorry, I'm doing it wrong. So it is better condition, it is less expensive than 79% times of its own history. But if you consider industry standard, it is like in more expensive category than 85% of the stock. So it is less expensive than 79% times of its own history according to price to operating cash flow, but it is more expensive than 85% of its own industry, which is semiconductor industry. So it is in bad shape according to this ratio if you consider with the industry. So what about price to free cash flow to equity ratio? So in this ratio, NVIDIA is in better position than 58% of the time if you consider its own history, like it is in better shape than 58% times. But what about industry? In industry, 84% percent shares are less expensive than NVIDIA. So 16% is like less. 16% is more expensive, but 84% are less expensive than Nvidia if you consider price to free cash flow to equity ratio. So Nvidia is in bad shape. What about price to book ratio? If you consider price to book ratio, it has a terrible shape. So 85% times of its history are better than this time, because it is better than 15% times of its own history according to price to book. So what about industry? In industry, 99% stocks are better than Nvidia if you consider price to book. So Nvidia is in bad shape. What about enterprise value to sales? The ratio is 25.6, and this is this is terrible as well, because it is better than own history in 42% time, and it is better than industry in 4% of the, like, it is better than 4% stock of its own industry, which is semiconductor industry, and 96% are less expensive than Nvidia. So what I want to make you make you consider is its price to book ratio. Median ratio is 26.8 and currently 45.9, while the industry price to book is 2.2. So it is way too expensive. Okay, so Nvidia is not really in good shape if you consider valuation multiples in relative value analysis. Okay, so I will give my opinion against Nvidia, but it is not a recommendation, investment decision, or anything. You have to apply your judgment, because this is Wall Street. Okay, so thank you so much for your patience. Have a good day. Bye.